Next, we discuss the trading account in details. This account gives the overall result of trading, purchasing and selling of goods. In other words, it explains whether purchasing of goods and selling them has proved to be profitable for the business or not. It takes into account, on the other hand, the cost of goods on the other value for which they have been sold away. In the case of the sales value higher than the cost of goods sold, there will be a profit, while reverse case, there will be loss. The profit disclosed by the trading account is termed as the gross profit and loss disclosed as the gross loss. There should be some importance for the trading account. The gross profit is disclosed by the trading account tell us the upper limit within which we should keep the operating expense of the business besides saving something for us. We can calculate the gross profit ratio and compare the performance year after year. The comparison of stock figures from one period from one will help us to preventing the unnecessary lockup of funds in inventories. In the case of new products, a businessman can easily fix the selling price of the products by adding to the cost of purchase and the percentage of gross profit that would be like to maintain. There should be a particular format for the trading account, debit side and credit side. The debit side, particular and amount column, and the credit side, there is a particular and the amount column. In the debit side particular column, we enter the opening stock, purchase less returns, direct expense, gross profit. It should be transferred to the profit and loss account. In the credit side, we enter the sales, and from that the return is less, and closing stock and gross loss, it should be transferred to the gross profit and loss account. The items included in the trading accounts are the opening stock. Well, opening stock means the goods lying unsold in the beginning of the accounting year. It can be seen in the debit column of the trial balance. The closing stock of the previous year will be the opening stock of the accounting year. Next is the purchase. What is meant by purchase? This item include both cash and credit purchase. Net purchase are taken into the trading account. And sales, this item include the both cash and credit sales. Only the net sales are taken into the trading account. And closing stock. Closing stock means the value it remains unsold at the end of the accounting year. It similarly does not appear in the trial balance. Closing stock is valued at cost price or market price, whichever is less. And the items included in the trading account, we classify them into direct expense. A trader will have to incur various types of expense for the purchasing of goods as well as for bringing them to his shop, such as the expense may include the cartage or carriage charges, brokerage, commission paid to agents for the purchase of goods, wages paid to coolies to transportation, etc. It involves the wages, customs and import duty, freight, carriage involved in cartage, dock duties, gas, electricity, water, fuel and packing materials, repairs and maintenance of the factory maintenance and factory expenses and manufacturing expenses. There are some basic formula for the trading account. How we calculate the gross profit from net sales, we less the cost of goods sold, we get the gross profit. And how we calculate the cost of goods sold, opening stock plus net purchase plus direct expenses less closing stock is the cost of goods sold. And how we calculate the net sales, gross sales minus sales return is the net sales, and net purchase means gross purchase minus purchase return is the net purchase.